In a decentralized banking system, transactions and financial services operate on blockchain network. This network is not controlled by any single entity, but instead is maintained by a distributed community of participants. Each participant has a stake in the network, contributing to its operation and in turn having a say in how it's run. This evolution towards decentralization represents more than just technological advancement. It signifies a shift in the philosophy of finance. It's about democratizing access to financial services, ensuring transparency in transactions, and giving power back to the participants in the network. Decentralized banking isn't just about changing how we perform financial transactions. It's about redefining who controls and benefits from these activities. Let's delve into Aave, a leading platform in the decentralized finance world that exemplifies the essence of decentralized banking. Aave is a DeFi protocol that allows users to lend and borrow a variety of cryptocurrencies. What distinguishes Aave is its range of unique features and services that it provides to its users, going beyond the traditional lending and borrowing model. Imagine you're stepping into the future of finance, where traditional bank loans are reimagined through the lens of cryptocurrencies. Think of Aave as a digital financial marketplace, where instead of walking into the bank, you're entering a decentralized platform. Here, you can lend your cryptocurrencies to earn interest or borrow against it, all powered by the blockchain technology. Let's say you have some Ethereum. On Aave, you can lend it out and start earning interest, much like how a saving account works. But with a twist, your earnings are directly tied to the ebbs and flows of the crypto market, reflecting real-time demand. Now, consider borrowing. In traditional banking, you provide the collateral like a house or a car. Aave flips this concept. To borrow, you over-collateralize, meaning if you need $100, you might lock up $150 worth of crypto. Well, why? Well, this is for safety net, ensuring that the security in a system that operates without central oversight. Interest rates in Aave aren't just about bank managers, but are algorithm-driven, adjusting according to the real-time supply and demand of the cryptocurrency. It's finance meeting technology, evolving as the market breathes. Holding Aave token isn't just about value, it's about having a say. Token holders actively participate in Aave's governance, voting on key decisions. It is a system where your voice and stake in the platform shapes its future. Having explored the unique features of Aave, it's crucial to understand the liquidity pools. Imagine a large collective pots of digital assets contributed by various users on Aave platform. These are liquidity pools. Each pool aggregates to a specific type of cryptocurrency, and they serve as a source from which loans are funded and into which the borrower deposits their collateral. Users on Aave, known as liquidity providers, contribute their cryptocurrency to these pools. In return, they earn interest, which accrues from the fees paid by the borrowers. This process is similar to earning interest on a saving account in traditional bank, but with a key difference. The interest rates in Aave are determined by the supply and demand dynamics of a decentralized market, not by the central authority. When the user wants to borrow from Aave, they access funds from these liquidity pools. The amount they can borrow and the interest rate they pay depends on the available liquidity in the pool and the current demand for loans. Borrowers must also provide collateral, which is also deposited into the pool, ensuring security for the lenders. The entire process of lending, borrowing, and earning interest in Aave is governed by a smart contract. These automated self-executing contracts enforce the terms of lending and borrowing, managing interest rates calculations, and execute liquidation if necessary. These automated enhance transparency and reduces the risk associated with manual handling. Interest rate in Aave liquidity pools are dynamic, adjusting automatically based on the real-time market conditions. When a particular cryptocurrency is in high demand for borrowing, the interest rate increases, incentivizing more users to deposit their currency into the pool. Conversely, if there is less demand, the rates decrease. There is also a concept of flash loans. A flash loan is a type of loan that allows users to borrow any available amount of assets from the liquidity pool without providing collateral. Well, what's the catch? The loan must be borrowed and repaid within the same blockchain transaction. This might sound like a momentary transaction, But in the fast-paced world of blockchain, it opens up a myriad of opportunities. When a user initiates a flash loan, they withdraw funds from liquidity pool. The smart contract that governs the transaction includes the stipulation that the loan must be repaid by the end of the transaction, along with a small fee. If the loan is not repaid, the entire transaction is reversed and as if it's never happened, ensuring the funds return to the pool. The primary use of flash loans is for arbitrage opportunity, where a user can exploit price differences across various exchanges. There are also used for self-liquidations, collateral swapping, and other complex financial maneuvers that were previously not possible without significant